Hello, everyone, and welcome. Today, we're going to be doing the second live stream for MSC Academy. So, just to introduce myself, my name is Morgan. I'm the head of trading at MS Equities Trading. I've been trading for over a decade, and I've been teaching students how to trade all over the world for just under a decade as well. So, in this video, we're going to be taking a look at three different trade ideas. First trade is going to be on euro pound. Second trade, we're going to be taking a look at the oil markets. And then the third trade, we're just going to be doing an update on the oil markets, Bitcoin as well. So just to kick things off, I like to take a look at the VIX markets or the VIX volatility index just to see what volatility is looking like in the markets right now. So we've had these very strong spikes to the upside. As you can see, there was a very strong spike around about the 12th of September. Uh, yeah, that was just before the weekend kicked off. No, that was the beginning of the new week, yes. So we had volatility dying down the previous week or 2 weeks ago. And then last week, we had a big, strong push to the upside. There was quite a bit of news coming out around the world. And then we've had quite an average week of movement. And the VIX opened up this week on Monday in not such a bad place. There was not too much of a spike to the upside. We have seen that the VIX market has had a continuous downtrend. So volatility is sitting around the sort of 18 level. There hasn't been too much else to report on this. So moving into the trade ideas that I've been taking a look at. So I've been watching the euro pound very closely lately. I've definitely seen that there is opportunity for a possible sell, but once again, that's my confirmation bias. Um, it's important that I mention that because I could be wrong, but let's just take a look at what I've seen on this trade. So just taking a look at the weekly charts, you can see that there is a strong push to the upside. I'm just going to go down to a blank chart here. So you can see here the market has had quite a strong push to the upside in the recent weekly move. You can see that in terms of setting up some levels, just what I normally do is I'll set this at the most recent high, historic high, and then I'll do the same at the recent low, and then I'll continue doing that. So just taking a look at these spikes over here, where the market has pivoted from high to low, that's normally where I take a look. So just to be able to establish your levels, that is quite important. So you can see here, there's been quite a lot of movement in terms of the highs and lows. You can see that the market has had quite a strong push since around about the December 2024. You saw the market hit this bottom and sat around that level. And now you can see that since then, there was quite a strong push up to the upside around April. And then the market pulled back all the way to this previous low at the 0.83 level. Now the market has recovered quite strongly back up to these 0.87 levels. So what I've been watching quite closely is how the market has come back to this recent support or this previous resistance level. As you can see, if I just put some arrows here, you can see that the market has tested this level continuously. This will give us an idea of where the structure is on this market. And you can see historically this level of the 0.8764 level has been tested more than once. And you can see how the market has come back to test it once again. So what I'm watching here quite closely is the movement on the weekly candles, just to identify that this level is historically quite strong. And you can see that uh, we got all the way up to this point on Thursday. The market hit around about this level, tested, and then there was quite a strong pullback. So I have definitely been watching very closely. I've already taken a short position in this market. I took my last short position on Thursday, but just going back into the levels. So in terms of my historic resistance and support levels for euro pound, I've been watching quite closely for this 0.876 level. So I'll just find it exactly. 0.8753. I'm going to call this a historic resistance. So in terms of my levels, what I'm going to do is just set up a continuation, a retracement level, and a range. So those are the three levels that uh, I normally look for. So in terms of continuation, if we see this market continuing to push higher, we could see the market moving to the upside far beyond this level. You can see historically the market pushed all the way up to 0.8872. So I'm going to put that in as the first continuation. And I'm just going to take a look a little bit further back here. So you can see the market has tested the 0.8872 level more than once. You can see back here there was quite a lot of price action sitting inside of this level. Uh, and then you can see historically it pushed all the way up to the 897 level. 77. And then in terms of retracements, we could see this market moving back to this historic level, this historic support, which is 0.85948. And then the next historic level for support, we can see down over here, we've got quite a strong level that is set up. That's 849. So in terms of the range, for the ranges, we could have 0.8872 to 0.85948. And then for the second range, that could be upwards towards 0.8977 to 0.8496. So in terms of these ranges, you've got a very, very big area for the market to move. This is definitely not a area that makes it easy Let me just quickly. So in terms of your movement, your first range, you could be all the way up in this area here. Just quickly gonna change the shape of this. So this could be range 1 that the market could be moving within. And then range 2, you could see moving between these levels here as well. So there's definitely a huge amount of space for this market to push to. And that is quite a difficult aspect because, you know, if you're looking to short sell into this position, your stop level is quite far away. So your risk reward is not that good on this trade. But building into this trade, you could definitely be very careful if you use this 0.87 level. That 0.87 level could make life a lot easier for you because if the market breaks above that level, then you could get out of your trade and know that your uh, position is a lot more protected if you're looking for a potential downside all the way to the 859 level. So taking a look at a daily, a hourly look, you can see that the market has had an uptrend where the market has been making higher highs, but no, it's been making higher lows, but no higher highs. So the market is respecting this 8.7 level continuously. And you can see how price action is getting tighter within this range. So this level is definitely being respected, but what I've been wanting to focus on is these resistance levels. So you take a look, you've got 3 strong resistance tests over here at this 0.87 level. Now, should the market move beyond this point, you could definitely see the market retesting the 0.87 level. But you can see over here that these ranges, this bullish range, has been formed here, which is making, uh, which is pushing price action all the way up. So you can see the continuous nature of this, the continuous uptrend of price since April. So I'm just going to say here, bullish trend since April 2025. So in terms of what I can see in the market, looking a lot closer, if we go down into the hourly time frame, you can see that the market has been forming up a head and shoulders over here. So if I were to take a line over here, you can see how the head and shoulders have been formed here. The market broke above this level, the 0.87428 level, and has pulled back from that. So what I'm expecting in this position, I took my first trade inside of this volume. So once I saw the strong push to the upside, I saw this pullback. There was a pivot candle on the hourly. Market set a bullish engulfing candle that was larger than the bearish candle. And then I saw this market begin to trickle off, and I set my sell position somewhere around here. And then I watched the market slowly sell off back down to this level. So you can see that this level, when you look at it on a tighter time frame, you can see that this level has been respected more than a couple times, and there could be a head and shoulders forming over here. So that's another point that I'm just going to add here. Hourly head and shoulders. So in terms of this head and shoulders, what I'm going to do in terms of this trade, I'm going to take a look at some indicators just to see what the overall markets are doing. Um, so you can see here on the daily, the stochastic is overbought. Uh, the stochastic is sitting right up in the 80s level, between 80s and 90s. And you can see that the market does want to pull back at some point. Now that we're sitting at this historic resistance level, often when you've got a historic resistance being tested and the stochastic is oversold, it tends to respect it quite well. Sometimes it doesn't. As you can see, prior to this, the market became oversold somewhere around about here, and then you just saw the market continued moving higher. But that is often, after a very strong bearish trend like this, you're going to see the market pushing higher back to its previous highs. So that is a common experience to see that the market, once it sets its trend, you can just see the market continuing. So I'm just quickly going to take a look at the weekly time frame to see what the market's looking like. So you can see over here, the market has gone back into its overbought region. So the stochastic, for anyone that doesn't know how to use the stochastic, there's a video on my YouTube page that you can make use of. You can just go take a look at this video here, how to trade using the stochastic properly. That video will give you a very good breakdown of how to use this indicator. So go take a look at that. That'll give you a much better understanding of it. So on the weekly time frame, you can see that the market is overbought. So I'm just going to say here, weekly stochastic is overbought. And then looking at the daily time frame, you can see as well, daily stochastic is overbought as well. Just going to quickly get my highlighters just to make sure I'm highlighting all the points of this trade correctly. So I'm just going to highlight here that the weekly stochastic is overbought. That's going to definitely be an important point. So the weekly stochastic is overbought, the daily stochastic is overbought. Now we can see here, this is a bit of a warning. The 4-hourly stochastic is oversold. So that's just another point to remind myself of. That's an important warning. Then in terms of hourly, you can see the hourly is overbought. So it's just coming back from this level. There was a very strong spike to the upside, followed by a pullback. So like I was talking to you about that head and shoulders formation, it's definitely a strong indicator that there could be a head and shoulders forming up over here. Yeah, that's quite a strong level. Another one, however, is you can see that there is divergence showing on the daily charts. So you can see that the MACD has been losing momentum while the market is making higher highs moving up to this level. So that is definitely another one that I want to take a look at just to remind myself of is you can see that the difference between these levels on the stochastic, sorry, not on the stochastic, on the price chart. The price chart has set at this 0.874 level. However, you can see that the MACD is losing momentum. So there's less buying power in the market. And we could see that the market might respect this level as a resistance and hold to it and not move back from it. And move back from it. So that's definitely going to be another indicator to take a look at. So I'm just going to add that one in as well. So with that MACD showing divergence, definitely could be an indicator for the market wanting to turn the tides and begin its bearish move to the downside. So in terms of looking at the 4-hourly time frame, there's no specific divergence showing. And then if we go down to the hourly time frame, you can see that there is divergence showing here. So that's also another aspect, is that you can see on the hourly charts as well that the MACD is losing momentum while the market is continuing to make higher highs. And now that you can see all the way through, this market has been making higher highs. Now all of a sudden we have the first lower high. So the market has broken its trend. So you can see that the market was trending up continuously and has now broken that level and begun to trade sideways. So this is going to be that level to watch inside of this range. Now, this could be a much tighter price range for the market to trade within. And this could be the true indicator. Now, like I mentioned to you, I got in around about this level on my short position, and I've held this trade down. So I'm really watching this 0.874 level as the opportunity to see if that market does pull back from the 0.874 level. We could see the market continuing to move lower and create a new trend. So as you can see over here, the market's pulled up to this level and pulled back quite fast. Now, it hasn't happened yet. The market's sitting within this, so I would say it's creating a price range. Now, just to add in those previous points, I was saying the daily MACD is showing divergence. Hourly MACD is also showing divergence. So that's another point to remember. And then, especially with the trend, the trend has been broken on the hourly. So trend broken hourly. And then beyond that, another one is that market has entered a price range. So that's going to be another point to remember. Uh, so 0.87431 to 0.87198. So price entering a range is another warning just to keep on your list, knowing that this market is obviously set at this level and is going to be respecting both the 0.874 level and the 0.871 level. And watching the market break either of these levels could be the big indicator. So for me, I'm being very careful about watching it break above 0.8743. But if it breaks below 0.8743, we could see the market forming a new trend. So head and shoulders, like I mentioned earlier, is often an indicator for the market to be forming a new trend, and we could see that trend moving bearish, especially given that we've seen on the weekly time frame the market is overbought, and we could see an opportunity for the market to move bearish once again. So in terms of this trade idea, we've already spoken ad nauseum about it. I've been wanting to keep uh, these live streams down to about half an hour at a time, making it a bit more digestible and allowing me to do more live streams continuously. So I'm going to finish up on this trade idea, but in terms of possible levels that I'm watching closely is now that I can see this trend line, this bullish trend forming up over here. We could see the market moving down some way to this level. Now, it's important for me to say this is complete confirmation bias. This is me just guessing at the end of the day. But again, you do have to make calculated guesses. As a trader, as much as you want to stick to a logical system, you are taking a look at the market and coming up with possible predictions of where price could be moving to. So if we see the market sitting within this range, we could see the next target sitting around about this level. So you can see that historically the market respected this level more than once. And again, if I take a look at where else this market can move to, you can see these buy sell zones stacking up over here. You can see multiple zones where the market has moved to those levels prior and has retraced from those levels. So from my side, my prediction is to see the market. If the market stays below the 0.874 level, it could do one of two things. It could form a range or it could create a new bearish channel. Now, if it creates a bearish channel, we could see market moving down to this level, closer to this 0.869 level. So we could break below 0.87, and then below that we've got 869, 868, and then 866. So just going to say here possible targets. So I'm going to say bearish targets. So 1, 2, and 3. We could see the market sitting at a 0.86, 86939, or we could see it moving down to 86838, or we could see it moving all the way down to 86699. So for this, that is a full trade idea digested. Of course, like I mentioned, risk zones. So that as the possible bearish targets, we've got target 1, 2, and 3. Now my stop levels are really going to be above the 0.8747 level. In terms of stop zones, I'm really going to be watching above the stop zone over here. And then if I just take this to the daily charts and I zoom in and just take a couple steps back just to see where else there might be a market moving up to this level. So you can see that stayed within that zone. Let's just walk it all the way back to this these historic levels here. So you can see here that the market also tested all the way up to these levels over here. So that was back in 19th of November 2023. And you can see over here historically how these three levels, so this level being the 0.8743, that's that level that I spoke about. You can see how the market has recently tested these three levels continuously. So the market tested that level, the 0.876. So I would say my stop zone is around about this level, somewhere around about over here. So I'll just mark this as my red zone. So red zone would be the absolute final point. And then this one as my green zone, just that I know where I'm watching the market as a target. So if I go all the way back over here, you can see the 0.876 is going to be stop 3, and then stop 2 is going to be the 8755. So I'll just say here, stop zones. Number 2, number 1 is going to be that 87431 is, I've set my trade already above that. So I'm just going to say here it's as number 1, going to go for the 8755. And then for stop 2, that red zone, that's setting 0.87638. So if I take a look at this, I mean, these targets are not sitting far apart in terms of the stop zones. Stop zones are quite tight, and these target zones are also quite tight. So that gives a really good breakdown for this trade, this euro pound short idea. So I'm going to stop this video over here because this is pretty much the end of the trade or the trade analysis. I've gotten down all of my points here that I want to keep a close eye on and make sure that I watch these very closely. And then I'll be able to take it forward and see where else I'm going to look to in terms of this trade. I can see here that the daily candle is closing out bearish. Well, it's very close to closing out bearish. So we had a bullish daily candle on the 28th. Yeah, so the previous bearish candle closed out already, and we have the new daily candle opening up. So we have to see what the market does going forward, and then we'll take it from there. So hope you got some good information from this trade idea. And if you want to go take a look at some other cool videos we got up on the MSC Academy YouTube page, pick and choose whichever one you want. I'm sure there's going to be something cool you'll be able to learn from. Here's a pretty cool trade idea on scalping the Dow Jones. Spotting a Forex scam is also extremely important. How to trade the stochastic, that's also quite important. And then here talking about how to trade the trend. Those two videos as well are very helpful. So once again, everyone, thanks so much for tuning into this video. I'm going to make sure I get another live stream video going up soon, and hopefully we can stay consistent with them, or hopefully I can stay consistent with them. But thanks so much for tuning in, and I'll see you in the next video. Cheers for now.